Where did all the volume in Bitcoin go? Does volume matter in crypto anyway? Does anyone care? Hi everyone, I'm Paul, and in today's video we're going to take a closer look at Bitcoin's volume over the last 7 months, why you should care, and more importantly, what it means for price given that Bitcoin's pulled back 50% from its all-time highs in November. So let's jump in. So historically I haven't paid too much attention to volume in crypto. Coming from a stock market background, we use volume quite a lot. But in crypto I didn't really think it was that important. But after reviewing my charts since the pullback in November, I noticed a really interesting trend with volume since mid last year. So what I've done is put volume on the chart and overlaid a simple 20 interval moving average over the top, and you can clearly see the trend of then volume over a period of time. So the thing that immediately stood out to me was that the average volume over the last 7 or 8 months is considerably lower than what it was at the beginning of 2021. So if we go back to the early part of 2021, you can see here the average volume was about 70,000, 50,000, lower periods 40,000, and then here after the big pullback in May, back up to 50 or 60,000, 30,000. But if you flash forward to the end of 2021 and then into 2022, the average volume is considerably less, 16,000, 20, pretty much the highs is 20 and it goes into the teens pretty often. That's quite interesting. I wouldn't have thought that we'd had this big drain of volume. And so the question is where has it gone? So I think that this is very symbolic of an issue that we have in crypto at the moment, which is no new demand. And so a lot of the volume is coming from the existing participants, and because we don't have any new participants entering the market, there's no new demand. So we have this significant drop off in volume. Now the other interesting thing is if we look at this first run up towards the first time we sort of hit this $60,000, $65,000 mark in early 2021, is that the move upwards was accompanied by volume. So you can see the increases in the volume here as we've moved upwards. Now volume tapered off a little bit as you'd expect, but the volumes, each push upwards you can see is attributed with a little spike in volume all the way to the top here. And so that's what you would expect. You would expect the market to go up, and that's a positive sign is when a market goes up on strong volume. And in the stock market, that's traditionally what you would look for. So this rally looks quite healthy on the back of increasing prices in concert with increasing volume. So that's what you'd expect. Now, when the market pulled back in May of 2021, you'd also expect to see that you have this increase in volume, and then you have price declining, and then volume sort of slipping away, and then you get these wicks down, and then a big run up, and then you get a bit of a spike of volume again. So then the interesting thing that happens is from this sort of June period, from then on, volume just never recovered. You can see here after we've been sort of sitting at an average of about 60,000, it just slowly declines and it comes to this level. Now if I put a line in here, a horizontal line, you can see it even more clearly. So this is obviously a bit rough, but you can see there, it just never recovers. It basically doesn't go back above that line, where if we pull back, you can see it's above that line for most of that time. And then if we look at the most recent rally to all-time highs going into November at the end of 2021, you can see that that relationship between price and volume is not there. So you can see here we have price going up in these two big sweeps like this, but there's not really, there's like a little bit of volume here, maybe a bit here, but pretty much it's flat. So in hindsight, I didn't really think of this at the time. As I said, I didn't really watch volume as closely, but this whole rally up to all-time highs is really suspicious because there's no volume backing up the moves higher, and so that makes that whole rally to all-time highs quite suspicious. And going back to that issue around demand, is I think this is just existing participants. There's no real new players coming into the market and buying it up, which would partly explain why we had this second leg of this big rally. You would expect it to have been bigger because this rally was quite strong, and this one you can see it's kind of like a bit weaker. You've got more wicks here. This was neater. And this rally wasn't that powerful. You probably would have thought it should have kicked considerably higher, and lots of people in the marketplace were talking about 100,000 by the end of the year. And so based on this initial rally, the pullback, and then what you would expect to see afterwards, you probably would have expected to see close to 100,000. So I think that was all quite reasonable at the time. But in hindsight, looking at this volume, it looks pretty suspicious. And equally, now that we've had this pullback in the market from the all-time highs in November, so we've had this big pullback here, pretty much in a straight line. Now, the thing that's weird about this pullback is it's 50%, so that's pretty painful. But it's pretty orderly. It's like not being this this big wick here where we had this leverage clean out in December, a little bit of one there, and then, one we had here more recently in the end of January. But it's pretty orderly other than that. Hasn't really been too chaotic. It's been a steady march down, just a grinding march down. And that makes complete sense when you look at the volume. When you look at volume, you can see the volume's just been, very consistent, nice and steady. And it just makes this whole decline feel almost orchestrated. And that's why I think a lot of people feel pretty frustrated at the moment. And it just feels almost mechanical, this sell on the way down. And so the other thing that the volume shows us, and which we want to be paying attention for going forward, is that when we have these capitulation bars here, they're generally accompanied by these big spikes in volume. And so that's really what you want to see on these big capitulation bars, a big spike in volume. So you can see there's another one here. That's not as big, obviously. And equally run-ups, you want to have big spikes in volume. Now, if we roll forward and we come here to the sell-off that we had in May, you can see, again, we had this capitulation candle here and a big spike in volume. So this is very consistent behavior. And that's really what we want to see in terms of a beginning of a bottom starting to form. We want to see capitulation candles and a big spike in volume. So that's how we know there's been a lot of market participants turn over. There's been a big change of hands. So you have fresh buyers coming in at this period and a lot of old sellers exiting the market, a lot of weak hands exiting the market. So that's what you really want to see. That's very typical of bottoming behavior. After we had this big capitulation candle here with the associated volume, we then had this extended period of sideways action here before the market recovered. And so that's very consistent with a bottoming pattern. You want a big capitulation candle and volume before you have sideways action and then the market recover. So if we come now to what the market looks like at the moment, you can see we do have spikes of volume here. So that's the leverage clean out in December, and then the big sort of rejection we had here on the 20th of January, and then the subsequent 21st of January, that big move downwards. So we did have a spike of volume, but it's nowhere near the volumes that we saw here. So you can see both of these previous ones back here from these previous periods. I'll just pull this across. From these previous periods, you can see the big spikes in volume. But if we come forward to today's date, they're just nowhere near. They're much, 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 much smaller. Again, that makes this suspicious. And so time will tell to see if we start to form a bottom here. But part of my thinking is that based on this current price action, we haven't had, I guess, the big capitulation you'd want to see in terms of the beginning of a bottoming. It sort of looks like that given, I guess, the lower backdrop, but historically it's not as big a spike in volume as you'd want to see. Now, arguably, you could say that this is a pretty classic bottoming formation. So we've had these big capitulation candles, and then we've had, this indecision sort of point here, and then we've gone into a little bit of a trading range, the beginning of the trading range now. So this is the 4-hour chart, so you'd want to see this shake out a longer period of time, and we have had this sort of kick up in volume, which from the historical average is bigger, but not as big as it was in the past. So the volume, I think, is quite interesting. As I said, I hadn't noticed that before. I don't pay as much attention to volume in crypto as I do in equities, but I'll probably be paying a lot more attention to it in the future. So whilst this is all sort of starting to form, I guess, the early suspicion of a bottom coming in, we are seeing that increase in volume. We are seeing the capitulation candles. The volume is much, much lower than it has been in the past. And I find that, again, that a little bit suspicious. And so time will tell. Will we have more capitulation to the downside, so some of these nasty candles, and then a much higher spike of volume? And that could be associated with a leverage cleanout, which we haven't really seen yet. We have seen longs getting liquidated as we've pulled back here. And we have seen the futures funding rate flip to negative a couple of times, but not for an extended period of time. So we don't have any sense at the moment that futures traders are really going aggressively short on the market. And that would be a good signal for us that the market may be in the process of bottoming, and then we would get, potentially a short squeeze, which would, catapult price upwards as all those short traders get liquidated and they have to buy back their positions, or their positions are liquidated on them. So I hope that was helpful. As I said, historically I haven't really paid too much attention to volume, but I definitely will be paying more attention going forward, because we have this demand issue in the market, and any change in volume is going to be, I think, a leading indicator to maybe new participants coming back into the market. Also, in terms of a bottom forming, or the first signs of a bottom forming, we'd want to see capitulation and a big spike in volume. And as I said, that could be driven by a liquidation of leveraged short traders, and that would be, I think, a positive. At the moment, I don't really feel like the volumes are significant enough based on historical volumes. Based on the low averages we've seen in the last 7 months, maybe these spikes in volumes are okay. But as I said, the general level of the volume makes me a little bit suspicious, and the sell-off from the all-time highs has also felt a little bit mechanical. So I hope that was helpful. If you found it helpful, it'd be great if you could like this video. That will help other people to find it. And if you're enjoying my videos, it'd be great if you could subscribe to my channel. I'll see you in the next video.